General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. All right. Wednesday, 5/28/25. Get my this down there. Let me get the screen grabber. Let's pull up Forex Factory. And what's tomorrow? I believe unemployment GDP. Yep. Unemployment GDP tomorrow. 8:30. This is actually my favorite time for news. I don't like the late in the day news. You gotta wait for volatility all day. And today, see if this moved, which I doubt. Today was the minutes. Okay, it actually went to a less chance based on the FOMC minutes. So now we at 97% no change. Okay. For the next one, did it go up? Because it was like at 74. Okay, it went up 3% for July 30. Yeah. Went up 3%. Went up 3% on the no change side due to the FOMC minutes. Now earnings for Thursday. Costco's big. Let's see. I don't think Costco is top 10 though. Let me double check because they be changing stuff. Costco's a big deal though. It's one of the never fall down stocks. Let's check Slick Charts. There we go. Boom, boom, boom. Costco's number 11. So it's not top 10. No top 10. Top 10 companies for NASDAQ tomorrow. But Costco is number 11. Let's go to the dollar on the daily. On the daily. So we took that daily high. We pretty much deleted this. This should be high of the week. Tomorrow could give us Monday, Tuesday, Wednesday. Tomorrow could give us this sweep and then a push down. We took Friday's high. Dollar to Friday high. Took Friday's high. Let's see. I'm thinking this is good enough for a opposing liquidity. Now I'm expecting lower prices. Today. Okay, so we did hit this daily failure swing. My target was previous day's high. Our target's hit, but it looks like we swept both sides of the board. No. It looks like we swept. This is my target. Looks like we swept buy side. So push up buy side, retrace, expand. No close above here. Let's go here. Nice push up. With the sell off. Nvidia earnings saved the day. Let's go to the weekly. Tuesday open price. It should just be here. Let's go back to the weekly. We're above previous week's open price. We tapped the weekly high, but we're not going. And we have a lot of up. Price closed weekly open, previous week's open price. We retested old weekly high. I still don't think we need previous week's high. Let's go to the daily. Oh snap. We got that tag here. We still got this gap here. And we still got a gap down here. Which this is Monday, Tuesday gap. This is new week opening gap, which should show up on lower time frames with Fadi's indicator. Here, this is good enough. This is good enough for high of the week. This just hasn't stopped here. We just don't have structure telling us that we can sell. Push up again will have to be consequent encroachment of the weekly. Here. If we push up again, we should get a consequent encroachment of the weekly fair value gap at 21,597.50. I'm still looking for lower prices though. I'm still looking for lower prices. Nvidia saved today, end of day. Turned it into a bullish day. Let's go to H4. Tuesday open price never got traded back to. You can say we retested this down candle here. And this could be like a fair swing. This is an ugly day. Wicked here, buy side, sell side. You could say it's a bear still in range because it took that, but there's nothing that we had a good enough reaction off of to say it's respecting this level. Looks like we can run highs again. Even previous week's high. Let's go here. There's nothing really stopping it. We smacked this. This fair swing's been smacked. All we have left is here. Which one is previous week's high? This looks like even highs, don't it? Let's tag both of them and see. 21 and 21. Okay, so this one's higher. It's previous week's high. Hold up. Previous week's high is smacked. We didn't close above it, but it's smacked. Previous week's high has been smacked. Look at our bullish for the week. Weekly open is way down here. I would love to sell it to weekly open. I see previous week's high again. See, there's no order block, but this is order block here. Test it here. Test it here. Let's go here. 21,562.25. See what happens when we hit previous week's high. Let's go back here. Yep, you got smacked. What's not hit from here? No. Everything's hit. We took out both highs. I gotta wait for my sale. It's not just gonna come easily. Lots of stop hunts. Previous high again. The level's been tested. It's already been retested. Price had a nice reaction, but earnings pushed it up. Could be a short squeeze before the real sell-off. I gotta sit on my hands till structure says otherwise. I wait for that higher time frame structure, and then lower time frame, time of day. No alerts set. See here, I don't see anything to expect a bearish reaction just yet. You can sell off here, and that'd be perfectly normal. But I'd rather sell a retracement with higher time frame order flow backing gig. All right, that's that on that. All right, y'all have a good day. Peace.